All right, good morning, everyone. Welcome to Daily Mortgage Rates Live with the Mortgage Calculator. We do this show every weekday at 11 a.m. Eastern. What we'll do is we'll wait just a couple of minutes here for everybody to jump on and for us to go live on all the different platforms, and then we will get started. So hang tight with us here for a second. We do have the comments up, so you can drop a comment as you tune in here. We do have the chat pulled up on the screen. So give us just a minute. Feel free to drop a chat when you jump in, and we will get started shortly. Hope everyone's having a great week so far. All right. Good morning, everybody there in the chat. Taryn, Jason, shout out to Cameron, tuning in from LinkedIn. All right. Everybody dropping in the chat. Richard, Nicholas, Mark. Hello, everyone. We're waiting just a few minutes here to get started. Make sure we get live on all the different platforms here. Got a great topic to get into today after we show the rates. So definitely excited about that. All right. Looks like we are good to go, so we can get started. We'll go ahead and take the chat off the screen so we can get into it. So, welcome everyone. My name is Kyle Hiersche. I'm the COO of the Mortgage Calculator, joined here by our president, Nick Hiersche, and our sales manager, Jose Gonzalez. We are a correspondent lender that specializes in non-QM loans. We do this show every weekday at 11 a.m. Eastern, where we go through the live rates for today. And then we go into a deep dive into a different topic every day. Today's deep dive is going to be something that we have a lot of experience in here at the Mortgage Calculator because we specialize in non-QM loans. This is one of the loan types that we specialize in, which is 2 to 8 unit mixed use properties. So we'll have Jose do a deep dive into that here shortly. But before we do that, just like we do every morning, Nick, let's go ahead and pull up our pricing tool, go through the live rates today for the different programs, and see what the market is looking like this morning.
All right, thank you, sir. Let me go ahead and switch my screen and we'll get started. So as Kyle mentioned, this is our pricing tool for our team of mortgage professionals. We have over 300 licensed loan officers, and we're licensed in 22 states for primary and second homes. And we can do our business purpose DSCR, which is going to be the topic today for our mixed use properties in 44 different states. So a ton of different opportunities there. If you'd like a full loan estimate, please get with one of our team members. This tool will show us the general rates and APRs for our general programs. Today is May 3rd, just after 11 a.m. Eastern. So all of our general programs have rates issued for today. And today is a big day with a Fed meeting announcement. So a lot of volatility lately, and there probably will be throughout today. But let's check out our rates this morning. We're going to set up a basic scenario to compare across our programs of a 400,000 loan amount. Slide the LTV to 80% loan to value. That would be a 20% down payment, 80% loan. We will set the desired price to 99. That means we're going to ask the computer to find the best rate at one discount point in cost. Most of our customers are asking to buy down the rate a little bit, so that's our average request. We're going to compare our programs, our conforming conventional programs. We'll go over first, then we'll check out our FHA rates, and then we'll go into our expanded guidelines, aka non-QM, where we have over 5,000 additional loan programs we can use. Now, VA is only for eligible veterans, so if you are eligible, we appreciate your service and we'll be happy to quote it up, but not everybody's eligible, so we don't do that live. And same with USDA, that's only for our property in a USDA eligible area. If you are shopping in a rural area where USDA is eligible, please let us know, and we'd be happy to quote it. But let's start today with our conforming conventional. We're going to set a purchase, 30-year fixed loan, standard loan, primary occupancy, single-family home, 1 unit, state of Florida, county Miami-Dade. And for all of our demos today, we use an estimated FICO score of 760 and an estimated debt-to-income ratio of 40. So with these basic settings, let's check out our conventional rates this morning. All right, looks like some downward movement. So we did see some downward movement yesterday. We'll probably see some more movement today, but that's great. So we are beating yesterday by a little bit here. We have an option. Let me make sure this is the best one. It is of 6.375 rate for one discount point and cost, which is a final APR of 6.551. So remember, conventional yesterday was 6.6 something. So we've seen the APR go down a little bit here. And remember, we're going to use the APR to compare across programs because that includes all the costs of borrowing in the programs and allows us to compare apples to apples across the different programs. So if for any reason our customer doesn't qualify for conforming or conventional, usually the next option we'll want to take a look at is FHA. So let's set up the same exact scenario here. And we're simply going to switch this to FHA. Everything else will stay the same. And let's compare our FHA rates this morning to what we just saw for conventional. So FHA does allow a little bit of leniency on the credit as well as the debt to income ratios. So it's typically our next option. And the best rate this morning looks like a 5.625 rate for 0.875 discount points and costs and a final APR of 6.223. So the APR here, even though FHA has upfront mortgage insurance and yearly mortgage insurance paid monthly, does have a little bit lower APR. So in this scenario, definitely recommend our customers out there shopping, check out FHA. In this scenario, it might actually be a tad bit cheaper for our borrowers. So now if our customer doesn't qualify for some reason for FHA or conventional, many other banks or lenders don't have other options. But fortunately here at the Mortgage Calculator, that's where we love to specialize in our expanded guidelines, aka non-QM, where we have over 5,000 additional loan programs beyond what you just saw. And that's going to allow us to use alternative income verification. So we'll keep everything else the same. We have one new option here, and that's to select our income. So full doc is what we use for FHA and conventional. That's 2 years of tax returns, what everybody's used to. But we typically select a non-QM program to use alternative income, such as 1 year alt doc, 2 year alt doc. We have asset related programs. We have business bank statement programs. We have investor DSCR programs for investment properties. We'll do that in a minute. We have our personal bank statement programs. We have VOE programs, 1099 programs, P&L programs, all kinds of different options once we select non-QM. Our most popular option by far for a primary home here that we're looking at is our personal bank statement 12-month program. And that's going to be for our self-employed borrowers. Many times our self-employed borrowers have various write-offs on their tax returns and either don't qualify for the loan they're looking at or don't qualify with enough income. So in this case, we're going to actually take 12 months of bank statements rather than 2 years of tax returns and determine a debt to income ratio here in this scenario of 40% using their actual cash in the bank with their cash bank statements there rather than tax returns. Most times our self-employed borrowers qualify for much more income and therefore can get the home that they wish or qualify where they would not qualify at all. So these non-QM programs are definitely solutions for our borrowers. The rates are a little bit higher, but great options. So let's check out our non-QM options this morning. So great option here at the top. The best program that came up was a 7.125 rate for one discount point in cost and a final APR of 7.205. So remember to compare that across the conventional was 6.5 something. FHA was 6.2 something. So you see here we have a totally different method of doing a loan for relatively not that much more cost there. Just about a half a point higher than conventional and about a point higher than the FHA options for a borrower who would otherwise not qualify. So these are great options here. There are a ton of different programs. Some of these may allow things like credit events, bankruptcies, foreclosures, all kinds of different options we have here. So please get with our team and they'll find which one works best for you. Now let me go back to our pricing demo. Before we pass it over to Jose, we always want to check out our investment property rates. So we love working with investors here, whether they're first-time investors or they own 10, 100 properties. We love to provide those options. So for our final demos here, we'll set up the same scenario, 80% loan to value. Everything else will stay the same. And we're going to compare our conforming conventional programs for investment properties to our expanded guidelines non-QM programs. Remember, FHA, VA, and USDA are not for investment properties. So we'll simply compare these two options. So we select conforming first. We will keep everything the same as all our demos. All we did was change it to investment property. Let's check out our conventional investment rates this morning. So looks like a little bit lower than it was yesterday, which is good, but 7% rate, 3.375 discount points and costs, and a final APR of 7.255. So remember, the conventional loan programs have added adjustments for investment properties. So that's why, unfortunately, we don't see any options for one discount point and cost. Most of our investors would like to ask for an option with a higher rate, perhaps, because they're okay with a higher rate as long as the property cash flows, so they can save discount points. In this example here, $13,500 in discount points is a lot of money that an investor can use for another investment. So if we go down here, cruise down, there are some other options, 7.49 rate for 2.375 discount points. So there are other options, but I definitely recommend for all our investors out there to compare to the non-QM program. So for our final live demo today, let's go back to our pricer and compare an investment property with the same exact scenario, but using our expanded guidelines non-QM programs. So when we select this option, we have a couple new boxes that pop up. First, just like last time, we have to select our income verification. And for our investment properties, the most popular option by far is our DSCR option. And that's because it doesn't actually require any employment or income from the borrower. We're simply going to use the estimated rental income from the property in order to see if that rental income can cover the PITIA of the mortgage payment, the mortgage expense of this proposed mortgage. If the rents can cover the expenses, that's a ratio of 1.00 or greater. So we have a ton of options for properties that cash flow and create greater cash than are outlaid on the mortgage expenses. Now, if a property doesn't quite cash flow and the ratio is under 1, we still have a ton of options for that as well. So even if the property doesn't quite cash flow on a monthly basis, we can still do the DSCR loans here. For the examples, I'm going to leave it blank so that we can see all the different options pop up. And the final thing we need to select for a non-QM investment property is a prepayment penalty. That is standard for an investment property under non-QM. So we're always going to select 3 years. That's the standard. We can choose 0 if you would like, but that will limit the loan programs and cost more money. We can also choose 5 years, but not all programs allow 5 years, but that does save money for those programs that do allow it. So 3 years is standard, so that's what we'll always use for our pricing scenario. So let's check out our DSCR rates this morning. So it looks like some good options here for 7.625 rate for 0.850 discount points. So we've solved the problem here for our investor. Less cash out of pocket, a little bit higher rate. They're happy. And the final APR of 7.7. So the APR is a little bit higher than conventional, obviously, but definitely recommend our investors out there check out DSCR. Doesn't require any employment, doesn't require any income, much easier loan, much quicker loan, and you can do multiple loans. So our investors with multiple properties can cash out multiple properties to purchase multiple new investment properties. So a great option here with a lot more flexibility. And if we cruise down the list here, you see there's all kinds of different options with different DSCR ratios, with different prepayment penalties. Some of these may allow things like short-term rental income. There's a ton of different options here for DSCR. Please get with our team so we can find the option that fits best for you. Now, let me go ahead and switch my screen, and we'll get into a very specific set of DSCR products for our deep dive. Give me 1 second here. So for those of you that joined us earlier, you know the topic today is going to be our 2 to 8 unit mixed use properties. This is a very niche product that uses the DSCR that we just explained in order to apply a traditional DSCR loan to what would be a straight commercial property, right? Remember, a 2 to 8 mixed use property would not be eligible for any conventional loans or any of the loans we're used to. Now we have this amazing hybrid product where we have a DSCR product that we can now apply to not only our regular stuff, 1 to 4 unit investment properties, which we just looked at, but now we can apply that same method to our mixed use. So a little bit of commercial as well, which are very prevalent now as cities are building this mixed use kind of city planning. It's the new craze, right, into all of the different cities. So a lot of times mixed use is actually highest and best for many central properties and, a city center type area. So definitely going to happen more, right, Jose? We're going to see more mixed use properties. We're going to see more builds of mixed-use properties, and now we have the solution for those mixed-use properties. So if you're ready, Jose, let's go ahead and have you take over.
Good morning, everybody. Thank you for joining us for Daily Rates Live with the Mortgage Calculator. This is a great product. If you're in the market for a mixed-use property, you should really be reaching out to the Mortgage Calculator for your options. And if you're a Mortgage Calculator team member, you should really be capitalizing on the amazing rates that we have to offer on this mixed-use option. Basically, mixed use is residential mixed use for this purpose is a property that has at least 50.01% residential. So it has to be majority residential in nature. It cannot be more than 50%, or actually more than 49.9 at that point. Commercial, that's the first point to consider, right? This is not for a mixed use, true commercial mixed use property where you have a storefront and a warehouse. This is for residential, where you have maybe a second story apartment, and on the bottom you may have retail, professional office. There are some restrictions on the commercial component, like you can't have like a mechanics shop in the first floor and have residential on the second floor, but that's usually not the case unless the mechanic built it for himself, right? And he wanted to live upstairs. But mixed use here we're talking about is a residential in nature component. However, if you've been out there shopping for the mixed use product, you've been noticing that all the outlets that offer it as a commercial product, which raises several obstacles. One of the obstacles could be the zip code. Are you in a zip code that the population density is too low? They're not going to do it. They're not going to care how great the DSCR is or any of that stuff. They're just not going to do it because that's commercial. They're able to do that. On the residential, they can't do that. That would be discriminating. So very good point to consider there. And then also that is, you're going to see right here, the rates that we offer are about 2 and in some cases 3% lower than the rates that you're going to find out there for the commercial component type mixed use product, where they're basically throwing this residential type mixed use property into the same bucket as the commercial in nature mixed use properties. They're not going to differentiate, so you're not going to get the break that you're going to get using us for this product. So let me get down to it. I'm sure you all are wondering, what is it that Jose's talking about? Well, here we go. Mixed use purchase 25% down with our 800 credit score premium credit score option. 25% down is the max, should I say 75% LTV is the max LTV with this product. We used to have it up to 80. We don't have it right now, but 75 is good when you're looking at these amazing rates that are lower than most of the regular 1 to 4 unit DSCR rates that you see out there in the market. And this is a mixed use option. So you're looking at 8.75. Actually, it has a little bit of a lender credit, and you can buy it down all the way to 7.875, just under 3 points. And this is for 25% down with an 800 credit. So I'll put a little bit of context here for you all. So now we have the same option with a 740 credit. And you see the rate did increase a little bit. Before we had 8.75. Now we have 8.875. And we have 8% as the lowest rate buy down option. So we have about 1/8% increase in the rate for dropping to 740, but still 75% LTV. So now we're looking at 720, and still we have good options here. 9.125 is now giving us a lender credit, so our rate increased by 1/4% on the upper side there, and we have 8.125 as our lowest buy down option. So we have 1/8% increase at the bottom end of the rate stack. But still, to note, still 25% down with a 720. Very important to note. Now here's where we start getting a little deviation in this product now is 700 credit score Rates are still very good. You actually have 9% with a lender credit. So the rate got a little bit better as we went lower in the LTV, and 7.875 is our lowest rate option. And that's with a 700 credit. And now we have 680 credit. Still the good rate stack, but now 35% down, 65% LTV, but obviously at the lower LTV. We're seeing a lender credit at 8.875, and we can buy it down all the way to 7.75. So they do open up the lower end of the rate stack there. As we get to lower LTV, they're feeling more confident. So now with a 680, this takes us to a different outlet, but still good option, because with a 680 here, we're at 30% down, and we're looking at 9.375, and that cost on that is 1.625 points. So with 30% down with a 680, we're looking at 70% max LTV. And on the cash out side, we're looking at the max LTV on a cash out of 70% LTV with an 800 credit score. So you're looking here, very good rates, 8.875 as the lowest cost option, and you can buy it down to 7.875. On the cash out side, basically you're going to be looking at the same FICO grid. So, except at a 70% LTV. So same situation here as you saw in the purchase with the cash out refis, going to be the same. So take that into consideration. Mortgage Calculator has amazing mixed use options. There are not that many outlets that are offering mixed use products. We love them. So be sure to look for us when you are contemplating this option, because you will definitely love what you're going to receive from us.
Beautiful. Got a question here from Rob on the breakdown ratio based on number of units or percent of square feet. It's actually both, correct, Jose?
Yeah.
Question.
Yeah. So they're going to look at both. So if you fall under with units, you're out of gas. If you got one big commercial unit and three smaller residential units, and you're under 50%, 50.01% on the residential, you're also out of gas. So
So remember, if it's 2 units, right? Because to be a multi-unit mixed use, it would have to have 2 units. So 2 units would have to be 1 commercial component and 1 residential. 3 units, by definition, would have to be 2 residential units, 1 commercial max, right? Remember, because just when we do the units, it has to be less than 50, like we explained, as well as the square footage. So great question, Rob. Very good. I think that's it on the product questions. Yes, it appears to be it. So let's go ahead and wrap it up then, Kyle.
Yeah, absolutely. Thank you. So again, great programs here for the loan officers on our team. Make sure you're aware of those to consult your clients through it. Anybody out there looking for one of these loans, you can connect with one of our loan officers at themortgagecalculator.com. We can pair you up with one of our loan officer consultants. We have over 300 loan officers licensed in 22 states for primary and secondary homes, but we can do these DSCR mixed unit use properties in 44 states as business purpose loans. So go ahead and get with us. You can also email us info@themortgagecalculator.com. And we do this show every single weekday at 11 a.m. Eastern, where we go through the different pricing and do a deep dive into a different topic, just like we do with mixed use today, like we did with mixed use today. So definitely tune in every day as we go through this. Thank you, Nick. Thank you, Jose. Thank you, everyone, for tuning in to Daily Mortgage Rates Live with the Mortgage Calculator. We hope to see you tomorrow on the next episode.
Thanks, everybody.
Take care.
Thank you, everybody.